Commerce Stock Exchange. Stock exchange. Stock exchange is a market where already issued shares and stock are bought and sold. Only members are allowed to buy or sell shares at a stock exchange. These members constitute the market. The stock exchange is run by a council of members known as the Stock Exchange Council. Members of stock exchange may be brokers or jobbers. Brokers. These are people who buy and sell shares on behalf of others. A broker is paid on a commission basis. Jobbers. These are middlemen who buy and sell shares on their own account, i.e. they trade in shares in much the same manner as a wholesaler deals in merchandise. The difference between the price a jobber pays for the shares he buys and the price he charges for the same shares when he sells them is called the jobber's turn and constitutes his profit. Types of jobbers. There are 3 types of jobbers, namely bulls, bears, and stags. Bulls. Commerce Stock Exchange. Functions of a stock exchange. It provides a ready market to those who want to buy and sell shares. It sets prices for security shares of different companies listed on stock exchange, which is of great help to both the investors and the relevant company. It helps direct a large part of savings by members of the public to invest in joint stock companies, which help in the mobilization of domestic savings. It affords investors an opportunity to sell their shares when they find a more attractive security to buy. This makes the transferability of shares meaningful. It publishes useful information in statistical and summary form about the various companies for guidance of both investors and relevant companies. It is used as a measure of a country's economic progress, i.e. stock exchange indices are taken as indicators of economic progress. Government gets income through capital gains tax that is levied on the profits made by selling and buying shares. Capital market enhances the flow of international capital. Companies are able to raise long-term finances through selling shares, then getting loans with high interest. It is a source of employment to those who work in it, like jobbers, brokers, etc. Provides an avenue for divestiture of state-owned enterprises, for example Uganda, Clays, the New Vision Publications Limited, etc. The Stock Exchange Authority undertakes the role of advertising shares of individual companies, hence marketing them. Common terms used in stock exchange are quoted companies. A quoted company is one whose shares are bought and sold on the stock exchange. Only public companies can be quoted on the stock. Commerce Stock Exchange. Stanbic Bank Uganda Limited. East African Breweries. Uganda Clays Limited. British American Tobacco Uganda. DRCU Limited. Note: unquoted companies are those companies whose shares are not traded on the stock exchange, e.g. private limited companies. Roman II. Going public. This means converting a private limited company into a public limited company on the stock exchange. Going public also refers to the floating the company. Roman III. Security. A security is any document that gives its holder a right to money or other property not actually in possession. Examples of securities include debentures, bill of lading, bonds, share certificate, etc. Roman IV. Blue chips. These are shares in companies of high repute and sound financial history. The bond. A loan security issued by a government or company that carries a fixed rate of interest. Company bonds are also called debentures. Roman VI. Portfolio. Commerce Stock Exchange. Roman A. Cumdiv or ex-div. Cumdiv stands for with dividend and ex-div stands for without dividend. Roman IX. Per value of shares / nominal value of share. This is the value written on the face of the share, i.e. it is the amount for which the shareholder is responsible in the event of a company's inability to meet its liabilities. The total per value of a company's shares represents the share capital of the company. X. Market value of shares refers to the value at which a share sells on the stock exchange. Roman XI. Capital market. These are markets that deal in the trading of financial products such as company shares, bonds issued by the government, debentures, commercial paper, and notes. These financial products are also referred to as securities and are generally traded on the stock exchange. Securities traded on stock exchange shares. This is a unit of capital issued by public limited companies to the public in order to raise share capital of a public company. Bond. A loan security issued by the government and carry a fixed rate of interest. Debenture. A loan security issued by a public company to the public and carry a fixed rate of interest. Commerce Stock Exchange. Stock. A bond issued by a government, local authority, local government in order to raise money from the public. Treasury bills. These are short-term security issued by the central bank. Steps in the purchase/sale of shares. 1. A member of the public wishing to buy shares approaches a broker, i.e. buying broker. 2. The buying broker inquires from other brokers if they have any client who wishes to sell a particular type of shares. Upon finding one, he buying broker haggles bargains for the price and finally agree at one. However, he must get consent of his client buyer about the price. 3. After agreeing on the price, he buying broker writes out a contract note, which he gives to his client buyer. This contract note states price of the shares, brokerage, amount of stamp duty, a fee for registering the name of the new shareholder to the company, details of the shares to be bought. 4. The selling broker makes out a stock transfer form and gets it signed by his client, the seller for whom he is acting. 5. The selling broker passes the stock transfer form and share certificate to the buying broker. 6. The buyer pays the buying broker after receiving the 2 documents from the selling broker. 7. The selling broker deducts the commission and tax on capital gain, if any, on stock exchange. I. General low levels of income owned by people. They cannot invest buying shares traded on stock exchange. Woman 2. High degree of illiteracy and ignorance. People look at it with suspicion and prejudice, thus not on demand. Woman 3. Lack of quality stock exchange specialists, e.g. stock brokers and stock jobbers. Woman 4. Weak industrial sector. Many people are employed in the agricultural sector. B. Most businesses operate on small scale, hence cannot be quoted on stock exchange since they usually have small profits. Woman 6. Political unrest in some parts of the country. This affects the expansion of the industrial sector. Woman 7. Low interest rates on securities, yet there are high rates of inflation in the economy, thus the investment in securities is discouraged. Woman 8. Limited government support by way of developing the financial infrastructure and inadequate funding from the government. Woman 9. Operations of stock exchange markets are limited to urban centers. X. Dominance of foreign and privately owned companies which do not offer their shares to the public. Woman 11. Existence of a large informal sector that is not regulated and monitored. N. Testing exercise 3. Okolo's books of account showed the following details as at 31/12/2019. SHS. Net profit 235,000. Capital 300,000. Drawings stock exchange. Plant and machinery creditors motor van 100,000. Furniture and fittings 50,000. Debtors cash at bank 90,000. Stock bank loan required. Prepare a balance sheet based on the above information. Using the balance sheet, calculate the following. I. Capital owned. Woman 2. Fixed capital. Woman 3. Working capital. Woman 4. Capital employed. Net capital employed. D. Gross capital employed equals fixed assets plus current assets. Woman 6. Liquid capital. Woman 7. Circulating capital. Woman 8. Current ratio. Woman 9. Quick asset ratio. X. Owner's equity. Stock exchange.